last major, financial statement that we would get from a company, and that's the cash flow. And once again, I kind of start with the seeking alpha. Boom, I plug that in. Okay, I hit the financials, hit cash flow, and want to take a look at that, right? So we'll scroll down here just quickly, kind of take a look. So things that contribute to cash flow here are going to show us positives, and things that take away from cash flow will show up as negatives. Okay. Sometimes some of those might seem a little bit counterintuitive as you're going through them, but let's take a look. So net income, yeah, it's just kind of nice. It tells us what their net income. Again, we could have and should have and would have seen this on the income statement, right? What their net income is for each year. A nice year in 2021, down a little bit, right? Down a little bit more there, but still cranking out some income, which is nice. We notice, and I'm going to say before I go any further here on WD-40, there's not a lot going on in their cash flow. Okay, not a lot that's different from what we saw on the balance sheet in particular, but also the income statement. Again here, right? I mean, that's the same as what we saw in the income statement. Part of the purpose of this is to see how these statements kind of interact, right? And how you can see something on one statement that might lead you to another statement to take a look. Okay, depreciation and amortization. We kind of noted that they didn't have a lot going on in their fixed asset category, right? So they got a little depreciation, not a bunch, it's going up a little, so they might have added a few things. Amortization of goodwill and intangibles. We kind of talked about what goodwill is, or intangibles. Maybe another company that they acquired, maybe just a product from another company that or a brand that they bought that they're going to sell now under their umbrella. Not a lot going on there, though. These are relatively small numbers. This isn't a huge company, but even for this company, these are relatively small numbers, and that's just the combination. Gain or loss from sale of an asset. This is something you really need to look for right now. For WD-40, they got really nothing going on there, right? They've lost a little cash, right, from but pretty insignificant from sale of some assets. Okay, kind of seems weird that they'd actually lose a little cash from sale of some assets. But stock-based compensation, again, you might take a look at that again, just if there's a huge jump up. There kind of was here in 2021. I find that a little bit interesting, but they might have had an executive bowing out, that type of thing going on, where that was a little bit bigger. I might take a look at that on the annual report. Other operating activities, nothing going on there, right? Changes in accounts receivable. Okay, so they've lost a little bit of cash. That's because their accounts receivables have grown a little bit. So that's, even though it's a negative number, it's not necessarily a negative sign. One of those counterintuitive things, because their accounts receivables increased, as we said, a lot, kind of right in line with their revenues, that have increased over the years. So changes in inventories. Now remember, we saw a change in inventory, and again, this is a case where as you build inventories, it takes cash, right? So if your inventories go up, your cash goes down, and that's what we're seeing here. And remember, we talked about that on the balance sheet, especially this particular year, where their inventories increased dramatically. And we went and looked up the reason why, right? And the company was trying to stock up because they were afraid of some of the supply chain issues, right? Changes in accounts payable, bouncing around a little bit there. Not huge, again, not big amounts, probably timing things that they got going on there. Here they increased inventory, maybe they delayed payments. This is one of those cases where if your accounts payable is going up, it means that you're saving some cash, right? Even though maybe you've ordered a bunch of stuff, and so those two could be offsetting each other a little bit in that case. So change in other operating net assets. Might take a look at that. Probably has to do with who knows. Okay, but might take a look at that. Cash from operations. It's down. A decent amount there, but again, that's just about all due to that inventory. and then this change in other net operating assets. I am going to go take a look at that. I'm going to pause for a bit and go look that up so that I can comment on that. So to continue, now that I've kind of looked that up, remember this was change in other net operating assets, and that took a chunk out of their cash, right? And so I kind of had to do a little sleuthing. Again, I go to the annual report for this past year, look that up, get down to operating activities, which is what, on page 30, okay? And that page will be different, of course, on your guys's, depending on what's going on. But additionally, net cash provided by operating activities decreased from period to period due to lower increases in accounts payable. We saw that in accrued liabilities. But this, as well as increases in other assets, primarily due to capitalized costs related to new cloud-based ERP system, which we are currently implementing. So there you go. That would be it. I could look up, I don't know if I need to, but look up what that ERP system is. I might do that just out of curiosity. Remember, you're kind of limited on space, but that at least explains, what that number is, or a big part of it at least is that new ERP system for, it's a cloud-based system for whatever. Again, I might go look that up. So investing activities, so capital expenditures, yeah, that's just kind of a constant. It looks like they're just constantly, probably updating. I don't see anything there that's, sale of property, plant, and equipment. Get a little bit of cash there, probably just old stuff that, they're getting rid of, they're done with. And so the net here, not a bunch. We got this going on here, okay? And actually I'll maybe comment on that. I think I can comment on that a little bit later with one that I way back in 18, right? Investment in marketable and equity securities. So they cashed in something. They had some money invested, probably in some government securities or something that they cashed in, and that created a bunch of cash back then. We'll take a look at that. The long-term debt, we talked about that in the balance sheet, right? So we kind of know what's going on there, why they issued some there. And here they repaid, some long-term debt. So, a lot of times these things offset each other, okay? Here, they repaid a big chunk of long-term debt. Remember I said here I'm going to kind of maybe explain this when I explain this. So kind of combine those two. I had to go back to that 2018, okay, financial or annual report. And, again, I had to look through it a little bit. So this has to do with the tax changes that occurred under the Trump administration, where they reduced the penalty for repatriating cash. And what do I mean by that? Well, a lot of these companies that are international, okay, they do business overseas. They pay taxes overseas in whatever respective country they might be doing business in. But in addition to that, often in the past, the U.S. has had kind of a punitive tax when they repatriated or brought those dollars home. And so companies typically that earned money overseas would just leave those monies overseas and use it to invest in things overseas. One of the changes, when during the Trump administration, when they reduced taxes, was to reduce that significantly. I think the repatriation tax went down to 5%, when before I think it was just based on, it was considered normal income, something like that. And I may be wrong about that, but it was a lot higher than like the 5% or maybe even less. And so we read here then, in the fourth quarter of fiscal year 2018, we repatriated a portion of our unremitted foreign earnings in the amount of just about $80 million, right, from the UK subsidiary, and used those funds towards repaying $80 million of outstanding draws on our line of credit. Now, these amounts obviously are a little bit different, but they typically repay some long-term debt, right? And so they did $80 million plus 7.6 for whatever, and that's what this was. Investment in marketable securities, that they sold those securities probably that they were holding overseas. Okay, they might, here's what's ironic about it. They might have even been U.S. government securities, but they're holding them overseas, right? And now they sell them, generate the cash, pay down some debt, and save some interest going forward. Interesting. This is one, scrolling down a little bit further. Repurchase common stock. Make sure you take a good look at this for your particular company. Some companies are very aggressive about that. It looks like WD-40's just got a pretty steady, system. They're going to buy back some, and if you read their annual report, the board of directors typically approves over a several-year period of time the repurchase of some stock. Okay, and they just kind of do it. They go into the marketplace just like you or I, and if the stock price is down, they may say, "Oh, we got a little cash. Let's repurchase some stock." Now I found this kind of interesting. I did not really anything for a report, but here they bought back the least amount. But if you went back up here to compensation for, I think that's up here. Yeah, stock-based compensation. So they do stock grants, probably is what they are for. It's probably some of their senior employees, senior executives, and whatnot. So they issued $9.6 million worth of stock, and they bought back 3.7. So actually, they had a net outgo of stock. A little bit strange. Okay, it's certainly not unusual for companies to give stock as part of their compensation. Some do stock options, and that could be why that number's so big. We'd be writing too long of a report if I went and looked at that to see if maybe that was just a chance that somebody exercised some stock options at that point in time. There could have been a lot of things going on there, but yeah, that's kind of an aside. Sorry, I digress. But then common dividends paid. That's kind of cool. I mean, I'd report on this for sure. In terms of especially my recommendation that here's a company that each year since at least 2018 has increased its dividend. Okay? Every single year it's increased its dividend. Not a lot, okay? Not a lot, but that's kind of cool. They've increased their dividend a little bit. So, okay. You get some totals down here, and those are just totals from the things that were up above. And so, little not we've already broken it down. We don't really need to look at the totals then that much. So not a lot down here. Some of this gets into some more confusing stuff that's maybe for an advanced business finance type of a class. We might take a look at some of those things. So it gives you an idea, gives you something to look at for the cash flow. Again, WD-40s is a little bit boring, so take a look at yours, digest it, go through it, look up some of those things, and ask questions if you have any. Thanks. Have a great day.